Hello, everybody. Welcome to episode number 10, SEC Filings. This is Value Investor TV podcast, the podcast that helps you grow your wealth and become financially independent. My name is Beko, and this is Hari. Welcome to this episode. All right. So this episode, we're going to talk about SEC filings. If you haven't listened to our previous episode, please do so because this is really tangential to episode number 9, going public. So be sure to check that out before you come and listen to this one. SEC filings. All right. So before we do that, let's quickly recap what we talked about in the last episode. We talked about going public. We talked about what is IPO, becoming listed. We talked about the requirements of going public and why it's beneficial, pros and cons. We talked about those. And in this episode, this is a continuation, of going public, not private, going public. And SEC is a regulatory agency in the U.S. that governs going public and many other aspects of the financial industry. But it is a key agency that regulates our industry, the financial industry, and there are some key filing requirements that companies have to file when they do go public. And we're going to talk about those today. All right, so let's start with the key bread and butter filing, a company filing to SEC, and that's annual report, also known as Form 10-K.
Yep.
So tell us about that, Hari.
Yeah, so the 10-K is kind of it summarizes one fiscal year's data, and the big difference between it and the quarterly reports or the 10-Qs is that it is audited financial statements. So that means it takes a little bit longer for the company to do it, but they have a auditor review everything, make sure that the company is saying what they have done and then they validate it against their bank statements and all that. And then it's I think the best introduction to a company that you're looking to invest in is the annual report, because it tells you what the company does, gives you an update from and compares it to last year's or multiple years of history. Tells you about the board of directors, who's on the company itself, what's their compensation. So it's a great place to find a lot of information. It is free. You can find it on the SEC website, the company's website. And for the most part, it is the starting point for what you invest, how to invest and how to learn about a company. Yeah.
And in that piece right there, you talked about quarterly reports.
Yep.
Form 10-Q.
Right.
And so that's a filing that happens every quarter.
Correct.
And it's non-audited.
Right. And so what happens is a company is required to meet certain requirements to be listed at the NASDAQ and the NYSE. They have to file quarterly statements. And if they do not file it in a timely manner, they may actually get delisted. So then their shares go into this nebulous gray market or OTC market if they don't. So there's an incentive for them to hit these 45-day targets after the quarter ends to file their statements. But the big thing is that only the company's accountants look at the financials. It's not audited by the company unless it's the fourth quarter, which is when the annual one is done. And typically there's less content there. I mean, they still tell you a little bit about the company, and for the most part, they'll still have a lot of the same sections that the 10-K will have. But there isn't as much depth, and so it's really more of just updating the investor about what has happened, since the annual report, and since the last set of quarters.
Yeah. And so these two reports, 10-K and 10-Q, are so important. And I just want to contextualize this as investors. These two forms, like Hari talked about early on, they are available for anyone and everybody.
Yep.
If they want to look at this company, let's say Apple or Microsoft, if you go to ir.microsoft.com or investorrelationship. Whatever the IP address or the URL address is, just type in investor relations company name, and then you'll find the link. When
Yep.
you go there, you're going to see SEC filings. There's probably a tab called SEC filings, and if you click that, you'll see a whole bunch of listings that the company reported to SEC, and those and some of those are 10Ks and 10Qs.
Yep.
And so you would be able to access these things.
The other place you can go is the SEC's own website, sec.gov or .gov, and if you know the company's ticker or if you know the company's name, you can search there and it'll show all of their filings, including this next one that we're about to talk about.
Yeah. So let's talk about that.
Yeah.
8K, Form 8K. Please tell us about that.
Yeah, so that is kind of in between the 10Q and the 10Ks. You know, companies may announce press releases. Some of them are, we're doing a charity thing, or we're, we've had a material agreement with a thing. Sometimes they warn investors, hey, we missed some sales targets that we were going to do. And, they're not required necessarily to do that, but they often do that as a, to stay on the good side of, being forthcoming about all of the, things that are happening. Sometimes they announce the leaving of key executives. So it can vary from, the simple to, fairly, important kind of, company information. And so that's also like the 10K and the 10Q is on the SEC's website, the company's website, and you can find it and is in a fairly standard format.
Yeah. And then the last thing we want to cover is proxy statements.
Mm-hmm.
Can you tell us about that?
So the proxy statement is actually is how you vote as a shareholder. So shareholders get have the right to elect officers in the, depending on the share structure. But for most publicly traded companies, and if you want to be listed in, one of the big indexes, now the requirement is that the shareholders have to have voting rights. So essentially the voting rights allow you to elect the company board, who are your representatives, in the board meetings and stuff. And so what that does is it can also tell you about their salaries, what their biographies of these people, what are their roles in the company.
Yeah.
It's kind of your like voter card. It tells you why we should vote for this. The funny thing is also if the SEC has a law that says if anybody with shares, and there's some minimum that they have to own, can actually put things on the proxy statement, and then they have to be voted on by the entire company. So some of those things are, activist investors or something like that want to have, I want the company to have 10% green energy for their whole, business. And so they put that, and then there's a requirement, and those are binding votes in many cases. So,
yeah. One of my first encounter of proxy statement was when I was reading through 10K for a company named Voya.
Mm-hmm.
It was one of the first companies that I was looking into. Was in Voya 10K, they would actually shift all of their compensation information to a proxy.
Right.
So that was my first encounter. So you'll see these are 4 examples: 10K, Form 10K, 10Q, 8K, and proxy statements. There are many others that companies have to file to SECs, but as investors, these four documents are the most relevant when you're deciding to invest in a company or not. But like I said in the beginning, 10K is like Hari said, good introduction to the company. It has a lot of details. It's audited, so it's bread and butter of investing. So why don't we go through the breakdown of 10K?
Yeah, let's do it.
Yeah. So there are 4 parts to 10K. Part 1 to all the way to 4. Let's start with part 1. Tell us about the items that are inside part 1.
Yeah. So part 1 is kind of is a very important section, because the first item when you see the thing after you scroll down, the first page of the 10K is it's a boilerplate statement with company's name and some SEC legalese.
Yeah.
And then right after that is section 1, item 1 is the business. So in that section, they actually tell you and give you a breakdown of what does the business do.
Yeah.
And why I love this statement or this section is that it really kind of breaks down the company into segments. It kind of illustrates how does the CEO or the board, if they were presenting to people to invest, how do they describe themselves, right? And so what you will find is, there are a lot of companies that have, this is kind of where you can gauge their tone. You can actually see how well do they actually understand their own business, and then it gives you an idea of what does the business really, have under the hood, and what, and so this is kind of the best place where, the art meets the science of investing. This is part of the art form of understanding what a company does, how do they operate in the marketplace. This is a lot of the stuff that we talked about in episodes early, 1 through 7, really fall into this business section. As value investors, we have to really think about the fundamentals of the company, and understanding the fundamentals start with understanding the business. And if you can't really understand the business, that's okay. There are a lot of businesses that I don't understand, but and that means that I stay away from them. I don't invest under any circumstances. So here is where you have to look at it and say, yeah, I can understand it, or no, I can't, and that's okay. And you just say, I'll move on to the next one.
Right. Actually, before we move on to the next item, I want to suggest to all of our listeners that if you're following us through this, why don't you go ahead and open up, you can go ahead and open up ir.microsoft or whatever and find a 10K and go through this with us.
Yeah.
So if you crack open 10K on PDF, you'll see part 1, 2, 3, 4, and then you'll see these subsections, item 1, 2, 3, 4, broken down. And so as we're talking through these items, go ahead and follow with us with an actual 10K. That'll probably help you guys out a lot. So let's move on to the next item.
Yeah. So the next section is 1A is called risk factors. And so the risk factors are kind of interesting because there's a lot of legal boilerplate here. Essentially, the company says, there are risks with, my business. Yeah. We may run out of customers. We may, competitors may take our thing. We
political.
They say a lot of things in here, but I think the thing that you want to really see here is not the boilerplate stuff. Is there are some times where they have to poke holes in their own business, right? And sometimes those things give you an insight into what the company is worried about. Is it competition? Is it regulatory? Is it financial? There are lots of different areas that they are looking through, and what changes over time, between annual reports, is also interesting to try and keep track of, because when you start looking at those risk factors and see how they've changed from year to year, you can see that the company has shifted in what they've looked at and what they're concerned about. So I mean, some of them are silly, and some of them are are legitimate. And so I don't I scan them, and then I try and pick and choose which ones I'm reading. If and they'll kind of highlight what the risk is, and then they'll kind of give you a detailed summary below it. So I kind of skim the titles of the risks and then dig into the ones that I want to look at. And this is a good way of kind of thinking about the business and learning what are the competitive advantages and disadvantages. And a lot of times they will talk about their competitive advantages in the business section, and in the risk factor section they will talk about the areas where those competitive advantages could fail. Might
erode, yeah. And then 2 and 3, properties and legal proceedings. You want to quickly touch on those?
Yeah, so the legal proceedings here is I'll be honest with you, I'm blanking on what the properties section is. It may be something
they have like table of like we own this property.
Oh yeah. So they actually talk about what are the different areas of the business and their segments, and that kind of stuff. And frankly, in my mind, this is all part of the business segment, even including the risk factors. And then item 3 is what their legal proceedings are, if there are any outstanding lawsuits. You'll be surprised that almost every single company has some sort of lawsuit, and some of them are immaterial to the business, and then they'll update on how did the lawsuit, if something was filed last year, did they settle out of court, how much did it cost them, that kind of stuff will all be filled in here. And then my favorite item 4 is mine safety disclosures, because shoe companies and software companies have to worry about their mining safety. So this is something that has existed for, I think, forever. And then they'll basically say mine safety disclosure none. And so I don't even know. Honestly, it's kind of silly that they put it in there, but it is required as part of that.
Okay, so that's part 1, largely describing the business as a whole, and talks about the risk factors involved. But the main takeaway is understanding the business for part 1.
Yeah.
So let's move on to part 2. What is in part 2? Can you take us through that?
Yeah. So part 2, and so the first section in there this is all related to financial information around the company. Segment section 5, item 5 is the part 2, item 5, I should say, is actually where they talk about stockholder issues. So they talk about what was the relative performance relative to a benchmark index like the Dow Jones or the S&P 500. It includes the number of registered owners. What are their dividends? Have they made any repurchases of stock? So this is, it's a section that you can actually glean from other areas in the report. I don't really care about the relative performance of the company. I'm looking at it from a valuation standpoint. So this is one of those sections that I'll skim it, but I'm not really paying attention a lot to it.
Yeah.
Largely because the information that you need is talked about in the areas in later sections in part 2, which are the financial data. So
that's item number 6.
Yeah. So selected financial data is the company is required to present financials in what's called GAAP, so generally accepted accounting principles, and so they are required to present this information in a fairly standard format. But in addition to that, the company may have modifications related to their business, and so they present their information slightly differently so that an investor or an owner of the business would look at it that way. A great example of this is like real estate investment trusts. If you look at it from standard GAAP accounting, the way that they appear and the way that they review their business is different because real estate investment trusts are not required to pay income taxes. They pay out 90% of their income as dividends, and so their shareholders have to pay the tax on it. Yeah. So in these sections, what you're really looking at is how does the company review their financials, and how do they present those financials, and how do I look at that. And this is a really important part of this. So item 6, they'll present, selected financial information. It may be, concatenated, statements, where they combine, the cash flow and or income statement and balance sheet. And then item 7, which is I think the probably one of the most important sections, is this is the one that I would pay attention to. They actually discuss the financial statements in detail. So they'll say revenue, and they'll talk about how they define revenue and what is, how did it change from year to year. Yep. And in this section, they'll also say, why did it change? So they'll say our sales grew by 15%. We attribute that to new store openings, and this was offset by some store closings. And expenses, and so they go through and they kind of give you a story behind the numbers, right? I think this is the most important thing that you'll from this episode if you only take away one thing, is the numbers tell you one story. the story behind the numbers is the real story that you need to learn, right? Companies are going to have ups and downs. They're not going to be, perfectly fly up and to the right every single, year. And knowing why the numbers are changing is more important than knowing the numbers themselves, right? And in many cases.
Yeah.
So I think this is a very important section to talk about. And it kind of blends into the other things where in the next section where they talk about the disclosures about the risks of the market, and which is 7A, and then item 8, which is the financial statements in detail. So this is in 6 they've selected financial information so that you can review it. Then they repeat this data again in item 8. But it's in a standard format, and they're not leaving out any sections. So
well, also in this section, they review previous years as well.
Right.
2016, 17, 17, 18.
And they'll talk about they'll add supplementary information there, so there may be additional tables than standard GAAP accounting. So there's a lot of things to digest in this section. In my mind, they're all really one section, right? Parts, items 6, 7, and 8 are all really one, thing together to be reviewed together.
Yeah.
And understanding those things is really important.
Yeah. So that was part 2, understanding financial information and what kind of story these numbers tell you, and what kind of stories that the executives tell you about the numbers.
Yep.
Let's move on to part 3.
Yep.
Item 10 and 11. I'll touch on those really quick.
Yeah, and so Becco mentioned this before, but this is the section where they talk about directors, the company, what is their background, their biography, and how do they get paid. How they get paid is item 11. Sometimes they actually will put this in the proxy statement. Yeah. Sometimes they'll copy it into the proxy statement. Sometimes it'll be only in the proxy statement, and they'll just refer you to it. So here, we really went into detail about board and the company directors. So if you're interested in how that they work and how the dynamics of the board and the CEO and the executive team, I'd go back and listen to that prior talk. But here's kind of how they explain it in their own words, and give you the ages of the people, what are their backgrounds and descriptions of their job. So this is kind of the section where I think it's important to pay attention to, just so that you can see, are they aligned correctly with your own interests, and what are their biases.
Yeah. So that's part 3, largely talking about the compensation package as well as the executives and directors breakdown.
Yep.
And the qualifications. And part 4, it's largely exhibits. So I don't think we need to go into details on part 4 if you want to mention anything about that.
Yeah, so part 4 is kind of a catch-all where they say stuff that didn't fit into the standard 10K, they throw in there. And so sometimes, they may break down, we have geographic segments for our business. We break down the geographic segments, financially, what is our revenue breakdown in, the U.S. versus Europe, and Africa, and so they kind of regionalize their data. Sometimes you see that in the selected financial statements in part 2. Sometimes you just see they break it down here. So this is a good area to pay attention to, just so that you can see what other information they're providing.
Yeah, great. So that's the breakdown of 10K. Let's go back and review really quick. So SEC filings, very important to look at as investors. It's mandatory filings that companies have to report if you want to stay public. It's regulated by SEC, the agency of United States government. And 10K we broke down the 10K into 4 parts. That's how they are submitted. Part 1, largely talking about the business. Part 2, talking about the financial information. Part 3, talking about who runs the company and their compensation. And part 4, kind of catch-all for anything that is left out in part 1 through 3. So that is it for us in episode 10. Very important 10K. That's how I start when I find a company that interests me. I look at 10Ks.
Yep.
And that's where I would start. and it's very resourceful. And not a lot of people really look at them.
Yeah.
That's another thing.
Yeah, I think you'd be surprised how few people actually read these things.
Yeah, it is actually. I mean, when you get used to it, it gets interesting. But when you first start, it could be really heavy.
Yeah.
So just be mindful of that when you're first starting. It will get easier. It will get easier. So, all right. Well, thank you all for joining us on this episode 10. And if you like this episode, please do subscribe. And if you're on YouTube, click that bell for notification. And leave us a comment. We would love to correspond with you in the comment section. And thank you all. See you on the next episode.
Thanks.